Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
The first step in an option strategy is developing an option mindset, whether I'm going to use a outright position, whether I'm writing an option, what my general sense of being wants to do with a particular strategy. In order, in essence, if I'm bullish the market, am I going to go with a long option strategy? If I'm bullish the market, maybe I want to write puts and have a parameter of high probability where if I'm selling options, selling puts in a bullish environment, perhaps I'm going to have limited return, but a high probability of a return with unlimited risk. Whereas buying an option, if I buy a call option, but I'm at risk with time decay. So it's important that you develop some type of a game plan and you have a certain time frame of what we call the realm, or what I call the realm of reality. And that's where some of the techniques I'm going to show you tonight can certainly help you. Remember I talked about the British pound a few moments ago, about the seasonalities with the British pound. The trade didn't go over too well for a futures or spot trade, but had we been looking at for longer term purposes, remember the British pound this time of year bottoms and rallies going into November. So this could be, if we look for any type of secondary buy signal in the coming days, weeks ahead as we enter into a new quarter, which begins obviously on Thursday morning, right, or tomorrow's close for currency traders, we'll be looking at possible opportunities still in options, by the way, on long positions on British pound if given, and it's the key word, if given a secondary buy signal. So I just thought I'd point that out to you folks out there. Some of you may be familiar with my work, and if you are, then if you've seen me doing past webinars, this is a trade that we talked about from a seasonality perspective. We may see the market trade in the British pound, and this would be a great time to discuss that, even though it's not in our presentation today. This could be a great time to present an idea for you to follow, just to let you know about the British pound's seasonal tendencies going forward. So what's confusing here is if the global economies are to recover, then the British currency should gain value against the U.S. dollar at this point in time. And if that's the case, then we should see higher values in the pound against the U.S. dollar. A possible target, if possibly we get some type of support in the pound, the pound-dollar relationship, if it gets down to around 156 is the next big target of support. We could actually see this market re-challenge the 168, 170 level by mid-November. So ISE options might come into play here for that particular setup, looking at we'll figure out what the monthly pivot supports are at the end of conclusion of trading for the month, which is tomorrow, right? So we'll be looking at our monthly projections in the pound, number one. Number two, with that knowledge, we'll be looking for secondary or confirming indicators for buy signals. And then three, we'll possibly be looking for either the November or December expiration on the ISE British pound call options. And that's something that we want to be focusing on going forward. And remember, in a few slides ago, I showed you that the British pound in the ISE is now available, all right, in pound versus dollar. So you're able to follow the spot currency with the ISE's options and or underlying British pound index at this point in time. So that's really an excellent feature for equities traders. Now, when we're looking at strategies, most people, if you're trading options, we're looking at a long call situation with two elements that we have to measure an option's value is A, price, and time. If you're looking at a call option, obviously the shorter the time the market takes to get to our determined strike price, the more money or the higher the value of that call option will appreciate. And so inversely, it's up to you to say, all right, how much is that premium right now? What's the realm of reality that the market can actually get to that strike price? And that's called pinpointing or targeting profit or price targets, and that's where pivot points can help you. If you think that there's a potential that the price can't get to a specific strike price in a given time, but maybe with time decay, it might be more fruitful to sell call options rather than go long a call option. And so here's a great example of selling a call. The value, if the price goes up and it doesn't quite go up enough to hit the strike price plus the cost of the premium, it may be a little bit more beneficial to short the call if one's bearish the market versus buying the call. And so therefore, option strategies, you can use them both ways. In essence, if we're looking for the market to go down, then one may look to buy the put option. And I think that, again, with options trading, traders need to really understand, whether you're a futures trader or an equities trader, you have to understand that the market with options, time decay, is something that can really take a wallop. And I'm sure if you've ever experimented with options, you know as soon as you bought the option, the market started to move your way, but the time decay and the option value went down against you. Pricing options is very important, number one. Number two, I believe if you are an options trader, you're a directional trader, and you have to understand what the potential for the market is to move in that particular direction. And so using options is, sort of a tricky game at times, but I think that with the currencies, the way they do trend and the way they have been trading, I think for the remainder or the end of this next fourth quarter, we're going to see increased volatility in the marketplace because there's just been so much action this year, not just in our U.S. equity markets, but in the recovery of economies and, of course, that pull between the bulls and the bears of what the Fed and central bankers around the globe's next move may be. In essence, if the economies really are recovering around the globe, you may have been hearing about the Federal Reserve's exit strategies on near zero interest rates, and of course their increase to push liquidity in the system. So what's their exit strategy on that? And I think that's what, as we start to see interest rate adjustments, that's where you're going to start to see increased volatility in the foreign currency arena. Because what does affect foreign currency price directional moves is what we call interest rate differentials. If interest rates here in the U.S. start to move higher as economic conditions are foreseen to be a little bit stronger, if they move higher in relationship to maybe overseas in Europe, whereas the European Central Bank, if they don't move to adjust interest rates, or if the Bank of England, BOE, if the Bank of England decides to keep interest rates flat because their economy is not producing, or if they don't see an expansion in GDP versus the U.S., then that interest rate differentials, we start to see more favoritism supporting the dollar, believe it or not. And that would be the likely scenario if we are going to see a sustained rally in the U.S. equity markets. It really depends on what? The economy improving, the economy turning around. And if the economy does turn around, folks, the Fed is going to be forced to have to tighten interest rates. And if that's the case, then you will see a move to the upside in the U.S. dollar, and you'll see the euro currency go down. And it is that likelihood of where maybe long put options would be probably a good scenario for the euro currency.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.